What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Quick shout out to 11 Labs for making every video possible with their professional voice cloning and text-to-speech technology. Check them out through my affiliate link on the profile page. Now let's get into today's investment starter pack. If you're brand new to investing and wondering where to put your first dollars to work, today's video may save you years of trial and error. Instead of chasing hot stocks, penny stocks, or the latest social media hype, we're going to look at 3 ETFs that can help beginners build wealth steadily over time while reducing some of the risk that comes from betting on individual companies. Think of this as the ETF Starter Pack. 3 funds that can provide diversification, long-term growth, and a simple strategy that almost anyone can follow. First up is VOO, the Vanguard S&P 500 ETF. VOO tracks the S&P 500, which means when you buy a share, you're investing in 500 of America's largest companies all at once. Companies like Apple, Microsoft, Nvidia, Amazon, Meta, and hundreds of others are already included. This is why many investors consider VOO the foundation of a long-term portfolio. Over the last 5 years, VOO has returned approximately 74%, turning a $1,000 investment into roughly $1,740 before dividends. That's the power of broad diversification and long-term investing. You're not trying to guess which company wins. You're investing in the overall success of American business. Next up is SCHG, the Schwab US Large Cap Growth ETF. If VOO is the foundation, SCHG is the growth engine. This ETF focuses on companies expected to grow faster than the overall market. Many of the biggest innovators and technology leaders make up a large portion of this fund. Over the last 5 years, SCHG has delivered approximately 95% growth, nearly doubling investors' money during that period. That's why growth investors love it. Now remember, higher growth usually means a little more volatility. But because SCHG owns hundreds of companies instead of just one stock, your risk is still spread across a large portfolio. The third ETF in our starter pack is SCHD, the Schwab US Dividend Equity ETF. SCHD focuses on financially strong companies that consistently pay dividends to shareholders. These businesses tend to be mature, profitable, and often hold up better during difficult markets. Over the last 5 years, SCHD has returned approximately 25%, which is lower than VOO and SCHG, but that's only part of the story. SCHD also pays dividends that can be reinvested to purchase additional shares, creating a compounding effect over time. This ETF is ideal for investors who want growth while also building future passive income. This one is one of my personal favorites that I have in my portfolio because it has not only produced consistent gains, but also exposed me to dividends, which I use to reinvest or drip back into the ETF. So how would I put these together? A simple beginner portfolio could be 50% VOO, 30% SCHG, and 20% SCHD. VOO provides diversification, SCHG provides growth potential, and SCHD provides dividend income and stability. The beauty of this approach is that you don't have to constantly watch the market or stress over every headline. Here's what separates successful investors from everyone else: consistency. Imagine investing $100 every month into these ETFs for the next 10, 15, or 20 years. Some months you'll buy when prices are high. Some months you'll buy when prices are low. That's called dollar cost averaging, and it removes the pressure of trying to perfectly time the market. Historically, time in the market has beaten timing the market. While everyone else is looking for the next stock to double overnight, many long-term investors are quietly building wealth through diversified ETFs like these. They may not be flashy, but they have a proven history of helping investors grow their portfolios over time. If you're just getting started, this ETF Starter Pack could be one of the simplest paths toward long-term financial success. Remember, I'm not a financial advisor, and this is not financial advice. Always do your own research before investing. If you found value in today's video, hit that like button, subscribe, and share it with someone who's just beginning their investing journey. This is Sat with Stocks by Sat 06. No face, just facts in 5. Keep learning, keep investing, keep building. Peace.